So there's one big thing coming for us. This is what we've bet on when we founded the company. Our main driver is not the Bitcoin price. The main driver is regulatory enforcement. We're going to get the first global big regulation basically aimed towards catching tax fraudsters in crypto, which is called the Crypto Asset Reporting Framework. I mean, it's not a secret that our system is broken and we are not really doing anything to better it. So we don't have a problem with tax income. We have a spending problem if it comes to the government. I think we need the state and we need taxes because obviously they cannot build those things and provide those things if they have no money. So taxes per se have absolutely like a reason to be there. But as we use them right now, it's intransparent and it's way too high. Right now, we estimate around 3% of crypto traders actually doing the taxes. Starting now in 2026, all exchanges worldwide have to report your user data, KYC data, transaction data to the local tax authorities. The whole cake of the market that we're serving is just gonna grow maybe like tenfold.
Welcome everyone to the New Money Podcast, the show where we talk about crypto and hopefully find out how exactly the future of money looks like. We've got Florian, the CEO and co-founder at Blockbit, today with us. Blockbit helps crypto companies and enthusiasts do their taxes, simply speaking. We're going to dive into the details and the nitty-gritty of all of that during this hopefully exciting episode. Florian, thanks for joining us.
Thanks for having me. Great to be here.
Awesome. So Blockbit is one of Europe's leading providers for crypto tax regulation. And I think this has been a complex and confusing and ever-evolving space. I think maybe to kind of kick it off, you're someone who thinks about taxes all day, every day. What country has the overall best tax regimen?
I think you can't answer this like this. It depends a little bit on what you do. Are you an active trader? Are you a hodler? If you are just buying and holding your coins, Germany is super attractive. Of course, there are some countries where you can actually go down to 0% tax on everything, but you would have to live there. And the trade-off is most likely not worth it. So if we're staying in Europe or let's say the US, it really depends on how active you are and how strategic you are about it. Because obviously there are a lot of legal ways to also postpone your taxes and depending on what you do. For example, Austria, where I come from, it's really good now for traders because crypto to crypto does not trigger a tax realization. So you can basically trade in stable coins and crypto assets as much as you want, only once you cash out. You pay taxes and there's also ways to postpone that with certain optimization strategies. So depends on what you do and of course your portfolio size. It might make sense to move your country.
Appreciate it. Did you ever think about that?
I think everybody thinks about that at some point in time. But since we have the company here, I have my life set up here and I love the country and the living standards. I'm willing to pay a little bit higher taxes and optimize as much as I can and decided to stay here with my residency.
Before we zoom further out, maybe let's jump right in. How did you get into all of this? I mean, you're a pretty young guy, started this company a while ago also. Like, how did you get into crypto taxes and what exactly is the company focused on today and how did the journey look so far?
So I have a tech background. I studied software engineering and I think those were the people that got into touch with crypto earlier than most. So just got introduced to Bitcoin by a friend of mine back in 2015 and started, well, stupidly mining Bitcoin instead of just buying Bitcoin. It was already not as profitable anymore, but got totally hooked on the technology, right? So blockchain and what it can do. And obviously also the investment aspect back then. Bitcoin, then Ethereum came around and then 2017, huge crypto hype with the ICO and first real big all-time high, which also made it into like the masses. And I did everything, like trading on 20 different exchanges. I did the mining operations, hundreds of different coins, thousands of transactions. And then there was a clarification of the Ministry of Finance in Austria in 2017 on how to tax crypto. And back then we had different regulation than we do now, which was every trade, every swap between crypto assets triggers a tax realization. And you need to evaluate the euro value at that point and stuff like this. And I've been working at KPMG at that time after my studies, which is like a tax and accountancy firm, big one. I was never in tax. I was there in marketing. But colleagues of mine obviously were, and they also were into crypto back then. And I was like, I have a problem. And we tried with Excel sheets, different accountants, and nobody had a solution back then. And we said, okay, well, I can program, taxes. Let's build a solution. And that's how it all started.
Oh, that makes a bunch of sense. And how did the, like these early mining operations work actually? Like how much money did you make on mining back in 2015? Like was it the gold rush still, or was it kind of like, how did that feel?
No, it was the end of the gold rush. So I remember I invested a few thousand euros into Bitcoin, which were 22 Bitcoin back then, and I bought mining equipment with those Bitcoin because you had to pay in Bitcoin. And I think I mined, I don't know, like 4 Bitcoin overall. Like I shut it down in 2018, I think. So should have kept the 22 Bitcoin.
So it's kept the 22 Bitcoin. That makes sense. How do you then kind of like take it from there? If you think about these early beginnings, you're kind of like fixing your own problem. Was there like a formative moment where you said, okay, this is now a real company. Like this is something I'm going to dedicate a good chunk of my life to, beyond that initial kind of like realization?
There actually was one moment we were at like a pitching contest. So it was still not a company. It was something that was in my area, and it was like, okay, we still need people, right? Maybe somebody wants to join and help us with the project. And we pitched the idea, and there was a jury as well. And one woman was there from a major bank in Europe, and she was like, oh, that is interesting, right? That definitely has a use case. And that was for us. So if the banks need it, then there's money to be made. Obviously, it was still way too early. We then founded the company like a month later and got our bank account shut down 2 months later because we are doing something with crypto, right? It's shady. We don't want to have you as a client. So it were rough times. We started because of that. But obviously, working with banks is something that is now getting started, but took a lot longer than we expected back then.
Yeah, walk us through that journey, right? I think you've built through 2 bear markets. You've hinted that the customer type is changing and has changed. How did that all play out, and what were kind of the pivotal moments?
Yeah, obviously you start out solving your own problem. So Austrian crypto investors that need to pay the taxes, it was the first target group. We kind of kicked off with 2 people full time into this. So I quit my job quite early. I was like, let's do it. If I fail, I'm going to find a job. I'm young. And my co-founder was still studying his master studies next to the project. But we kicked off an MVP in like 3 months time, which was like simple data upload integration of like, I think it was back then Coinbase and Bitpanda and some of the major exchanges, and the tax calculation for the Austrian tax regulation back then, quite simplified. Then gathered user feedback for almost a year. So we didn't charge for the service. We were like, it's not something worthy to charge money for. And then went live with the first version in 2019. So that was when we started generating revenue. The good thing is we were both in crypto early on. That was like still the cool down of the hype cycle. We had some nice portfolios, so we didn't need to pay us any wages. So we didn't need investment to build like this first product. But then obviously bear market, right? The realization kicked in end of 2018. So maybe it's not going up again. Maybe this will take a little bit longer. So there were still gains to be taxed, and we have this delay of our service, right? So you need our solution the next year and not during the bull market. So there was still demand, and we basically built up the first user base. And
think about quitting, or did you ever lose conviction during these kind of like when the company was still early, but then the downturn was so sharp?
No, me personally, I didn't. I knew somebody needs a solution for this, right? And obviously that there could have been a big competitor or something, but there wasn't. The market was really free. We knew we were early, and the big hockey stick, like where suddenly mass adoption happens for this kind of service, was still way out. So since we did have the leisure, so to say, so to not say, okay, I have to quit now, I need to find a job, I need money, I need to pay myself, that was definitely a benefit we had back then. We didn't think about quitting. At least I did not. Hard to say for the others, but obviously it were hard times. 19 and 2020 even. Some people thought like it was over with crypto in general, right? We focused a lot on just like product and development. We did actually raise a first fundraising round back then. Coming out of the ICO hype, we were like, maybe we should do something like this as well, but it doesn't make sense to put a token onto something, right? If you have no use case, it's just going to be a hurdle, and it's ultimately going to kill your project, I think, if you just launch a token and have no real utility for it. So we did a security token offering, which was just like a participation right in the profit of the company on the blockchain. And we sold that to private investors and raised 2.5 million, which later on was, I'd say, a pretty genius move because it didn't dilute us in our equity. And it gave us enough runway to survive the first bear market.
Like, really stupid question, but why is it a smart move? Like, isn't that equivalent to diluting in your equity if you give away profit rights?
As it was structured, it was basically a participation in the cash flow of the company on revenue base. And there was a clause in there that we can basically convert it to shares in the company at any time at a certain interest at the latest valuation. And since we didn't do a fundraising round for a long time and the company grew and we then did our Series A way later, it converted at the Series A and at a way, way, way higher valuation as if we would have raised the seed round back then.
Got it. So it was like a safe or convertible, basically.
Yeah, but even longer runtime than you usually do a safer convertible with.
Was anyone pissed or?
No, because they're still up, right, on the investment. It was still quite good terms. So and it was a tradable asset, right? So it was not something with a lock-in for like 10 years, as you usually have with startup investment. It was a token and you could just sell it. And there were quite some secondary activities actually happening. So nobody could actually blame us. Everybody knew what they signed, right? As I said, they were still very much in a profitable investment at the moment.
Got it. You power through that initial bear market and then the sun rises again. And what
for us, it did. For our biggest competitor, it did not. So that was actually a major milestone for us in summer 2020 when our biggest competitor in Germany ran out of money. They actually grew quite fast. They had a lot more revenue than we did, but they ran out of money. And so we had the chance to acquire them, which we did, and basically fused two companies together, got great talent also on the board, and automatically entered new markets, the US, Germany, and Switzerland, where they were active in. So that was our first step into like international expansion, going out of Austria into larger markets.
What's your postmortem like? This is so interesting. I think a couple of questions. Like, one, why did you succeed and they failed?
I think we raised money in hard times and we really focused on raising money. They started a little bit too late. And obviously, when the market is bad, investors just would rather let you bleed out and then acquire cheap, but then pay high valuations. And so with this security token, it was more like individual investors, like smaller amounts. They tried to raise like a Series A from venture capital. And with the market conditions, that was just not getting through.
And then the second one is like, how did that merger and like that acquisition go? Did you keep big parts of the team on? Was that culturally possible? Like, what were the challenges and what would you have done differently?
So the good thing is a lot of things we didn't have to decide anymore because they were already down to the founder team, as obviously they had to cut and extend the runway, potentially getting that investment done. We took over the founder team. One of them is still with us today in like a senior role, a C-level role, responsible for product actually. And we merged the product, which was some heavy lifting, so to say. I'm never going to do like an acquisition or merger again where I have to merge two software products. I think that haunted that for 2 years to get everything ironed out. Back then, it was still the right decision. They had a more powerful backend, we had a better front end, and just like combining those. But we definitely underestimated the effort.
And if you were to kind of like acquire a company again, would you then just say, okay, we got to shut one down, or would you just not acquire a company with a similar play? Or
we did in 2023. We acquired another competitor, and it was a completely different acquisition. It was basically taking over the user base and shutting everything down. So no human resources, no product, no company. It was acquisition, building a migration funnel to just take over user data into our software, and then shutting everything down like within 3 months. And that's probably what I would do again, because I'm quite convinced that product-wise out there, we have the best solution and there's nothing that we would want to add from any competitor.
That makes sense. How does the market look like right now? Like, I mean, you're just gobbling up these competitors. Like, who's now also moving into the market? Is there pressure from now the KPMGs of the world? Like, what, are the big guys now kind of like taking it seriously? How does the market continue to evolve?
So we are a software provider, right? We are not in competition with any of those accountancy firms. They rather use our tool, potentially acquire, but I don't think we're there yet. Like, crypto is not as big for like a big four to think about acquiring a global player in that space. There is one more major competitor in Europe. Europe is our core market, right? So that's where we want to grow. And then there's 10 or 20 in the US. The thing is that the US market, it's almost as big as the European market, but it's only one tax law. So it's basically one language, one tax law. You can just roll it out over 50 states. While in Europe, you have 48 different tax regimes and a lot of different languages and culture. So you have to tackle country by country and jurisdiction by jurisdiction, which makes it way harder to scale. But once you're able to serve it, you have a pretty sticky business. And we don't see any new players entering the space. I think it somehow has consolidated, and it is also not cheap to build up something and run a solution like ours, right? We run archive nodes for all the different blockchains. I think you need a team of like 30 people to just like continuously improve, maintain, and also obviously extend the services. Crypto is evolving so fast. You have to catch up to new chains, new protocols, new exchanges, and obviously also the changing law. So it's really hard for somebody to get started from scratch. There could be like spin-outs or something from those big players that you mentioned, but they are not as tech savvy and they are not in crypto. So it's really hard for them to understand like the user journey. So I think it's just not a focus of them. Maybe at some point they think about acquiring.
So you guys are dominating Europe and kind of like consolidating that market. What's next for you? We talked to Garrett from your team, who told me that you're just much more optimistic and forward-looking guy on that partnership. If you think about the next 5 years, like where do you go from here?
So there's one big thing coming for us. And it is, we didn't know how it's going to be called or how it's going to look like, but this is what we've bet on when we founded the company. It's regulation, right? Our main driver is not the Bitcoin price or the crypto market or mass adoption. The main driver is regulatory enforcement. If you don't get caught for tax fraud or tax evasion, why would you do the taxes? And that took quite a while. Mostly like anti-money laundering is like the first step. Regulation goes in. We got a lot of anti-money laundering regulations in the last years. And now we're going to get the first global big regulation basically aimed towards catching tax fraudsters in crypto, which is called the Crypto Asset Reporting Framework. And it's going to go live on the 1st of January 2026. Right now, we estimate around 3% of crypto traders actually doing the taxes, not because they want to fraud, but knowledge is limited, right? It's hard to do if you don't have the right tools. And obviously there's a few that say like, well, I mean, it's pseudonymous, right? Nobody knows my wallets. But starting now in 2026, all exchanges worldwide have to report your user data, KYC data, transaction data to the local tax authorities. And that's obviously going to be big for us in terms of like the whole cake of the market that we're serving is just going to grow maybe like tenfold. Right. And that would be still 30%. Hopefully it goes 30-fold and we are at the 100% compliance rate, but that's a little bit too optimistic. So we're preparing for that. We've extended our services to also reach not only the individual crypto trader, but corporates, government agencies. So we're also serving with software solutions for the authorities. They need to interpret the data, right? So we're not delivering data of users, but they get the data from the exchanges and they need somebody to process the data. We said, okay, when we have the capabilities to do so, we already do for users, why not provide it also to the authorities, because somebody's going to do it. And so at least you have the security that if you are declaring your taxes with our software, you know the government is using the same algorithms, right, to check your results. So that's a big thing we see a lot of demand for at the moment. And the next big thing is that once you have your whole transaction history for tax reporting, there's also a second thing that you as a crypto trader might have needed in the past. It's if you're cashing out to a bank or if you're transferring a larger sum from one exchange to another, you're going to get asked for a proof of origin. And it's super inconvenient. It's like you write a support ticket and then there's like 5 times ping pong between the support agents, screenshots and downloading CSV files. So if you already have everything gathered in one place, why not get that with a click of a button? So that's something we're working on and really looking forward to that. It's going to be like basically our second product. So we've been laser focused on taxes, but now this is an opportunity that we can't miss.
Oh, that makes sense. If you think about these like 3% of people that actually pay their taxes, how did that kind of like cultural, like, was there a cultural clash? I mean, I think like a big part of crypto is pretty hardcore libertarian, right? And they probably feel like pretty justified in not paying taxes and they think they're doing that for the greater good or something like that. And like, then you guys come in and you're building this like crypto tax task force. How do you feel about it personally? Like, how aligned are you with the kind of like libertarian anti-state roots of crypto? And how did you feel the community react to what you guys are building?
I mean, it's not a secret that our system is broken and we are not really doing anything to better it. So we don't have a problem with tax income. We have a spending problem if it comes to the government. And I'm definitely at the stance that you should separate money from the government, but we still need a government for infrastructure, healthcare, all that stuff. If you privatize everything of that, I think it's going to end catastrophic and you're going to have paywalls on everything and a lot of poor people will suffer immensely. So I think we need the state and we need taxes because obviously they cannot build those things and provide those things if they have no money. So taxes per se have absolutely like a reason to be there. But as we use them right now, it's intransparent and it's way too high. And I understand people having this extremely libertarian view. I think I'm somewhere like in the middle of it. Otherwise, I couldn't basically bear to work in the space and provide a tax solution, right? But fact is still, if you don't do it, you're gonna get punished, right? And if you actually do it and you know that you're evading taxes, you actually might also go to jail, right? So it's just how the world works, and we're not going to change it from today to tomorrow. So that's why we built the solution, and why I think I can align with both sides of the equation.
And who were these early adopters? Like, you have now been catering to these like top 3% most tax forward people in the space. Like, how did you find them? What aligns them? Are they similar in nature, or are they all different kinds of customers?
It depends mostly on the jurisdiction, right? Also, like how you grew up in those cultures. Germany is a big market of us, Austria, obviously, as well, Switzerland, the US, in general, like Central Europe. It's people are used to being compliant, right? It's a system that works, and it's a system you grow up in with. Then obviously there are countries where people rather like don't do it. These are not the jurisdictions that we cater to. And we also see now this crypto asset reporting framework that's going to come in 2026. It's 48 countries that adhere to this, right? So it's not all of them in the world, but it's the major ones. It's the EU, it's Switzerland, the UK, the US, South Korea, Japan, Singapore, right? Those are the bigger players, and those are also those that have people that proactively think about taxation. You never learn it, right? I mean, I didn't have any financial literacy in school. It's something you have to either grow into if you're becoming entrepreneur, right? Otherwise, in countries like ours, it's all done for you automatically by the state, right? So it's really like people, I think, 35 to 50 that are in some kind of financial background, that are those that are proactive with the topic.
And if the US, Germany, Austria, maybe Central Europe are like the most compliant countries, what are like the worst?
I mean, obviously you have some states that basically they drag you to it because of the tax laws, right? Cayman Islands and Panama. But the surprising thing is they are all now also in the crypto asset reporting framework. Kind of have been forced into it, I think, like Malta and Cyprus, and those are those where people would rather move if they don't want to pay the taxes. And then obviously there are some countries where you have a totalitarian regime where there is no official way to pay taxes. It's all done underhanded. But I'd guess like the living standards are not that good there. So I wouldn't name anyone specifically, but
you guys announced a fundraising round earlier this year, led by Elevator Ventures. Talk to us briefly about that one. Why did you go with Elevator? What was the rationale here? And what will you do with
it? Good question. So it actually, we were not actively raising. We had a profitable year last year, which was a major milestone for us as a SaaS startup, right? It's like once you cross the threshold to cash flow positive results. So we were not actively looking, but the crypto market goes up. And suddenly the topic is hot again with VCs, and regulation comes around the corner. We had the MiCA regulation, big thing in Europe and also like globally recognized. So reg tech in digital assets is one of the hottest things next to AI, it seems. And we got approached by a few investors, but you don't just take money because investors come there, especially if it's VCs. You need to look at terms and strategic value and all that stuff. Elevator Ventures really was the best fit for us here. Actually, the only fit, because we were thinking of going into the direction of extending our products right into proof of origin, which you need if you cash out to a bank. Behind Elevator Ventures is Raiffeisen Bank International, one of the largest retail banks in Europe, Eastern and Central Europe. So our target markets as well. Having a player from the traditional space close by to developing those products is definitely a benefit that we will leverage. And I think we will have to do it sooner or later anyways. And it was just like the perfect timing, and having them on board now as not just an investor, but more of like a strategic partner. That was the rationale behind taking the investment.
Awesome. Love to jump into a round of quickfire questions. Just gonna shoot a couple of questions and you'll be free to answer. If you had to work at a different crypto company, which would it be?
Wow. Bitpanda, probably.
Why them?
They're the first that came to mind, and they're in Austria, so I wouldn't have to move.
They're the Austrian kings. That's true. Which jurisdiction is the most complex from tax compliance point of view?
Probably Austria, actually, if you take the complete history of how it changed in consideration.
What makes it so tricky?
We had the tax reform in 2022. So we're one of the first countries in the world that actually has crypto tax law, not just like a a clarification by the financial ministry, but actual law. And so you have this breaking point of where a completely different calculation system and valuation system changes into a new one. And they didn't do it with one date. It's 4 intersection points where things change between 2021 and 2025, and that makes it super complex.
If you think about, so we've had this question, looked at this question from all the kinds of different angles. Is MiCA a hit or miss? Is this kind of like the best way to move forward on crypto regulation? Like, if you think about it from a tax point of view, like, did Europe on balance, did they hit or miss with the tax regulation that's live now?
So we don't have a tax regulation European-wide, right? It's always a state-level taxes. MiCA has nothing to do with taxes, but I think it's a hit because it was just necessary. We needed something. Obviously, it's far from done. It's gonna need to keep up and adapt. I think from the tax regulation in the different member states, it's hits and misses all around. As I said in the beginning, depends on what you're doing in crypto. One might be good and one might be bad for you.
Hey, Florian, thank you so much for joining us on the show today.
It was a pleasure.
Giving us the update. And to everyone that listened, thanks for joining us. We do this every week. So see you soon.